All right, we got less than a month before tax season is over and done with. April 18th is tax day. So we have Ryan Dodson with Liberty Tax Services, JW Degance with Jackson Hewitt answering your tax related questions. You can text us those questions. The number is at the bottom of your screen, the 336-379-5775. Okay, we got lots of questions coming in. This person says, is it okay to do your own taxes on the 1040 EZ form? And can you still get forms at the post office? Ryan.
Tanya, unfortunately not. Can you still do it on EZ? Yes, absolutely. You can still do your tax return on the EZ form. Sure. Can you get those forms at the post office? No, unfortunately not. Everything has now moved online. So if you need access to them online, I suggest going to the library. You can go to the library and pull them off there. However, the best answer at the end of the day is just filing your return electronically. So whether you come see a paid professional, which will file your return electronically, or if you use an online software, file it electronically as well. It prevents a lot of errors.
Yeah, and in the 2 Wants to Know section, if you make under $73,000, you can file for free electronically through the IRS. And we've got a link there for you if you want to try and do that. All right, JW, this person says, if I have income from Virginia and North Carolina, my wife only has income from North Carolina, can we file our taxes together?
Yes, yeah, absolutely. You can specify which income is for each person and which state it was earned in. So you absolutely can.
Okay, and maybe let's talk about this. What's the difference in filing jointly and filing separately, JW?
Filing jointly, you get to take advantage of a lot more credits than you wouldn't be able to, like, for instance, earned income tax credit. Marriage filing separately is if you really just want your individual information to be your own. Like, so you separate your taxes from your spouse's taxes. But it's most advantageous to usually file married filing jointly.
Okay. Are there any, maybe I'm asking all these other random questions just because I think to myself, it leads to the next thing. Is there any reason why you would file separately?
Yes, there could be some reasons that you might need to be able to file separately. It could be if they had a debt or past IRS debt that they had maybe before they got married. Might be one example I would think of. But there might be some situations, but for the most part, it's just better just to group it all together and take advantage of the credits.
Okay. All right, Ryan, this person says, if you're buying a house, can you file it on your taxes?
Yes, you can claim mortgage interest on your taxes. You can claim any points that you paid when you originally got your mortgage on your taxes, the property taxes. All that can go on your taxes. However, it is going to go onto a Schedule A, and that is your itemized deductions. And to be able to itemize your deductions, you have to have almost $13,000 worth of itemized deductions if you're single, or almost 26 if you're married. And itemized deductions are things like your mortgage interest, your property taxes, your charitable contributions, and other taxes you may have paid, like state income taxes and so forth. So those are the main itemizations.
Gotcha. Okay. But you can't write off how much you paid for the house or anything like that.
No, ma'am.
No. Okay. All right. This next question is, my 76-year-old sister passed away unexpectedly in another state, in Michigan. I live in North Carolina. Is someone required to file taxes in her name? JW.
Yes. So I believe they're saying if she passed away in 2022, it's important to file her tax return and to get that taken care of. So they may need to reach out there if they can probably still do it here locally if they have all the information. They're going to have a power of attorney and executor information, be able to complete that for the deceased person. But it is important to get that return filed for her.
Okay. This person says, my husband and I have guardianship of our great-granddaughter. We don't work. We only get Social Security benefits. Are we allowed to receive the child tax credit?
Tanya, this year the child tax credit rules have reverted back to the pre-COVID rules, and which is basically you can get the child tax credit if you have earned income. And earned income is income from working, salary W-2 wages, or let's say you're self-employed. Those are examples of earned income. Now, if it was last year, would have been a completely different answer, because last year those requirements did not exist because of the COVID rules.
You mean the filing your 2021 taxes in 22?
Correct.
Okay. Just want to make sure. All right, JW, this person says, I'm a widow as of 2021. Can I file as head of household, or I have no dependents, or do I file single?
So what you can do with being a widow as of 2021, you can actually file being a qualified widow, and you can do that for 2 years. And so that would be probably the best advantageous filing status for you to do. It is very similar to married filing joint, so taking advantage of those credits.
Okay. Someone's asking, can you claim a relative that lives with you who doesn't work?
Yes, you can. It does depend upon, how much income they earn, what their ages were, how long did they live with you. Several different factors into whether or not you can claim someone who lived with you but didn't work. Yeah.
Okay, we got about less than a minute. Do you have to make a certain amount of money to not file taxes, JW?
Yes. So there are requirements for filing. So I believe single, it's around $12,000, $13,000. If you make less than that, you're not required to file, and it goes up to about $27,000 depending on if you're married filing jointly. But again, it might be advantageous for you to still file your tax return to take advantage of credits that you may deserve.
Okay, and they say I haven't gotten my 2021 taxes. What should I do? 15 seconds. You're going to have to call the IRS.
You haven't received them, then yeah, get into the IRS portal and set up an account and see where it is.
Yeah, and that is the thing. You need to create an account with the IRS and do everything online. That's going to be the best way. Thanks, guys, for your wisdom and your expertise. You can find a recap of all of this in the Who Wants to Know section.